Hi, Leonie. How are you?
I'm good, thank you.
Great to see you. And finally, we got this little thing to work, guys. It took us like an hour or two to make the microphone work.
We've got it done now. Yeah.
We're at the Net. We're in London. But you're not based in London, are you? You're
No.
kind of international.
Yeah, in the Cayman Islands principally.
Yeah. Tell our audience a little bit about you, who you are, what you do, where you're from.
Sure. Well, I mean, round here is very familiar to me because I started my career, I trained as a solicitor in the city with Herbert Smith just around the corner as a corporate lawyer.
Yep.
Then I moved over into the US law firm White & Case, and I walked past that on the way coming to here, which was quite nostalgic to look back through the doors and kind of remember those all-nighters that I used to do. Oh,
It's all good. It's all
is
good.
that working?
It's all good.
Then moved over to in-house at Morgan Stanley over at Canary Wharf around 2007.
Yep.
Just at the beginning of the kind of inception of AML in compliance in banking, principally dealing with work post-MiFID and information flows and anti-insider trading work, but also involved a little bit on the financial crime reporting side, which at that point was being mainly done by the lawyers. I'm sure anyone who was around then will remember that.
What year is this?
This is like 2007, 2008, just pre-crash. Then went out to work in the Cayman Islands just around about the time of the financial crisis, which was good timing.
Yeah.
But at least I met my husband there, and I then took a break to have children. So I took about 9 years off. Went back into compliance around 10 years ago, and since then I've done a multitude of different roles. Outsourced AML officer in the offshore world for investment funds, dealing principally with investment funds. My major role was head of compliance at a global offshore bank, category A retail bank, but also that provided services to corporate structures and trusts.
Yep.
So that was really great to kind of cut my teeth on. My first head of role, basically in a small bank, you are doing everything in that role, which gives you fantastic experience to be able to understand all the nuances around ongoing monitoring, PRs, periodic reviews, obviously KYC, all of the systems and controls that the banks have in place to guard against financial crime.
So if you don't mind asking, what were you practicing specialism-wise before you got into
Originally M&A.
M&A? Wow.
Back in the day.
Wow.
And then when I moved in-house to banking, it was sort of a multitude of different things.
And back then when you were doing M&A, talk to us and our clients about what did due diligence look like back then? What
really,
did you do?
Basically passports as is.
That's it.
Yeah, pretty much.
What about corporate structures, UBOs? How did that look back then?
There was a lot of chatter when the first AML directive came in. Obviously, there was a slew of kind of internal guidance notes, and I remember the Herbert Smith guidance note on the AML directive was about that thick.
Wow.
But it took a long time for everyone to get their heads around what that meant.
And you looked at that and you said, that's where I want to work, that thick line of regulation.
Actually, no, not at all. And it initially didn't, because I don't think any of us really understood what that meant in practice and what was required. I don't know that the regulators did at that stage either. And the NCA possibly did, the actual financial crime units and the police. So it took a while to kind of get your head around what that meant. And as I say, it was really principally lawyers doing it at the banks in terms of the external reporting, the SAR reporting. And then, really not that many SARs were going out. I'm sure that if you spoke to the financial crime units,
they were. They just weren't.
Yeah. And then it sort of shifted. Oh, Lord.
When everything could go wrong goes wrong, today is that day.
Yeah, right. Let's just get your computer out.
Thank you so much.
Changed the Cayman Islands dramatically back in kind of 2015-16 when our regulator determined that because of the increased scrutiny. What are you laughing at?
I'm just laughing at today, sorry.
Because of the increased scrutiny from FATF, obviously, we had our grey listing, which we had to kind of overcome as jurisdiction. Because of that increased scrutiny, they introduced the requirement for there to be natural person AML officers. So it was at that point that I went back into compliance after having had my babies and took on a raft of outsourced AML officer roles for investment funds, which is now quite a cottage industry in our islands of teams that perform that function and sort of have an overview from AMLCO, which is our kind of anti-money laundering compliance officer role.
Yep.
MLCO more in this side of the world, and then MLROs for investment funds. So I did that for a bit, working for Harneys Fiduciary which is a fiduciary add-on to the law firm. They've since.
For people who don't understand what a fiduciary add-on to a law firm does, especially Harneys in the BVIs, could you comment on what the main purpose, what the main clientele came for, actually?
Yeah, sure. I mean, now they've split, I should say, so that Harneys Fiduciary is split off from the law firm. But it's quite common practice out in the offshore world to provide effectively a one-stop shop. So often the client will come into the law firm initially, on board with the law firm for, say, setting up an investment fund, and then the suite of services from a fiduciary perspective, which could include RTAs, so register and transfer agents for the fund, administration services, any fiduciary trustee services required, and AML officers, and fund and entity formation, so TCSPs, can all be provided by sometimes a kind of sister company under the same group as the law firm.
Yeah. So you would have probably very complex structures.
Yeah.
Coming to you guys because of the nature of your clients, who they are, what they're trying to achieve with setting up new companies. So talk to me about the complexities of KYB, how that originated, because you experienced the journey of evolution of CDD. So when KYB came around, how did it look? How did you guys deal with it? How did you find those owners?
I think it all has always been, if you start from first principles, a need to understand who are the client, what are they doing, and why. And a good lawyer / compliance person will always ask those questions and has always asked those questions. Of course, in the offshore world, when you have tax advice and particular kind of structuring advice, the structures can get extremely complex. And obviously, to identify your ultimate beneficial owner can be quite a complicated thing to do. So
that's something you guys were actively doing back in the days. Was there a threshold you were looking at, 25%, 10%?
Well, I mean, the Cayman Islands decided at some point to move to a 10% or more threshold. I think the only jurisdiction in the world that applies a beneficial ownership threshold for AML compliance of 10% or more, and their beneficial ownership reporting threshold is 25%. So yes, we have had that cross to bear, which does cause problems when I was at the bank and I'm dealing with a global framework. You do kind of have to then pipe up consistently and kind of explain the nuanced differences in the Cayman Islands. I would say, despite having been on the grey list and gone through that as a jurisdiction and come off the other side now, that we now apply, some of the most stringent rules in the world.
Yeah.
In terms of, regulatory requirements from an AML KYC perspective. But of course, it's not just about the box ticking and the documents you get and who you get the information on, who you ID and V. It's actually about making sure that you're fully applying a holistic risk-based approach to whatever your services you're providing to your clients.
Yeah.
And that's where I think we've seen a real evolution over the years of people understanding what the risk-based approach means, how to identify risk properly within a structure, which isn't just a PEP over here in the corner who might be one of the beneficial owners, but relates to the whole gamut of jurisdictional risk, the confluence of risk with different risk factors. I'm trying to pull that all together, which in a complex structure is quite difficult because you have not only risks attaching to what the entity's doing and their behavior and their ongoing monitoring and potential red flags related to the entity, but also all the individuals, both the directors, both the UBOs. You can have, in a funds context, multiple supporting parties. You've got the administrator, the investment manager. So all of that kind of needs to be captured in a risk assessment, which can be really tricky to do.
I mean, just on that, that you can have a risk assessment that's quite shallow, right? So we've seen tools that, for instance, risk assessment is one form for the entire case, right? But what we're describing here is a risk assessment that one takes into account the risk of the entity and all the subsidiaries, the screening results, the source of funds for the entity, the location of the entity, the type of entity, LLP, LTD, all that good stuff. But also each owner, each director needs to have its own risk assessment. There's some KYC they do, right?
You need to be able to combine the two. Yeah, exactly. Yeah. That's how you combine the two. So historically, I think it's fair to say that most, even quite sophisticated financial service providers have used either kind of a binary where any one high risk in the structure sends the whole thing high risk, which is obviously not great. It's a blunt instrument, because are you really honing in and targeting where the risks
You're
sit?
not really understanding risk, are you? When you're just labeling it high risk, that's not understanding it.
And it's not a targeted risk-based approach, because if your book suddenly creeps over to over 50% high risk, because you happen to have a large number of PEPs, are you really seeing the risk
And
profile of your business?
You might find this funny because you're from an ex-legal background, but law firms now do this. So I speak with law firms.
I'm sure they do now.
They're like, everybody's EDD enhanced. We're asked for source of funds. I'm like, doesn't that impact your firm wide and how you ultimately holistically look at your
and I think
demographics?
a mature regulatory approach now, which you find across the globe. So both out in the Cayman Islands, our regulator is now great at this, and globally the regulators are ensuring that when they come and do their examinations or inspections. So now globally, I think regulators are applying much more scrutiny on your implementation of a risk-based approach. And it's not just a question of treating everything as high, because then there's too much noise and you cannot identify where your real risk sits as a business. You can't correctly articulate your risk appetite, and then you don't know when you've exceeded your risk tolerance, and everything from a risk perspective falls apart, I think, when you try and treat everybody as high risk, because that's simply not the case.
It puts the real risk, like you said, how do you know which one is your actual risk? It muddies the waters where you can't actually spot risk.
Exactly. And we're all trying to kind of be as efficient with our resourcing as possible in this world today, and just throwing bodies and tech tools and more money at the problem to do a gold-plated job to everybody. I mean, you do want to do everything properly, but applying the same standards across the board and a one-size-fits-all approach is not doing proper risk assessment, in my opinion. So tools and really sophisticated tools that enable you to determine risk properly and confluence of risk, I think, is where the market's heading now, and I hope that we see more of that kind of influence. And in fact, then we could talk a little bit about Simur, the eKYC tool that I'm
of course. So before that, just on risk-based approach, because you mentioned it, and I love this topic. I think I introduced you to Foresight, who are actually doing great stuff on risk assessment. Dynamically, so how are banks doing risk assessment when you started? In your last kind of roles, how were you seeing risk assessments be done? Was it a questionnaire that was sent to the customers? Was it kind of investigated on the phone? How'd you gather the data? Where'd you store it?
Well, I think
how'd you risk score it?
It's got to be an ongoing, it's the client life cycle, right? And that's what banks and everybody is getting more proficient in, is ensuring that it's not just assessing risk on day one, because obviously risks may not be apparent. You have so much more information via your ongoing monitoring. And in banking, of course, that includes transaction monitoring, which gives you a lot of information about the behavioral activity and markers that your clients are exhibiting, which is very useful. It's much harder outside of banking to try and pinpoint what suspicious behavior, but not even suspicious sort of behavior that's moving into a higher risk.
Can you give us an example of a suspicious behavior?
It depends on what sort of service you're providing.
Goes to betting shops, goes to ATM outlets. What is the suspicious behavior to a bank?
Activity flow through. So, taking cash deposits and then wiring them out to places for which you have no connection. I mean, there's fraud rules now that the transaction monitoring tools that the banks employ have really sophisticated rules, like, for example, the Actimize system, to determine what constitutes flags of fraud behavior, which can include kind of, suspicious activity on a card that doesn't relate to the normal pattern of behavior that the client's been exhibiting to date. So, unusual jurisdictions and online banking, they're looking at
things like, so when I have fraud alerts on my HSBC bank, sometimes I get a message saying this card is being used in central London for like 10p, right? Is this you? Well, I live in London. How does it know that I'm not in central?
I think with apps now, it's much easier for clients to also highlight what suspicious activity looks like and beneficiaries of suspicious transactions. And then the bank can identify that beneficiary more easily and then apply a block across the board on all transactions going to that specific account or card or whatever, or merchant, for example. The crossover between what might look like suspicion for a bank and how that might impact law firms. I think it is important you were just saying, law firms can often say, oh, well, that's the bank to do to check for suspicious activity, but you are being paid fees by your clients, and that activity and potential payments are coming in from bank accounts all around the world, depending on where your the payer of your invoice is. And I think there's red flags there you can be checking to potentially see whether or not the account from which your fees are being paid is the one that you expect it to be, or in the jurisdiction you expect it to be, and have controls around that, for example. I mean, I know from having worked at a bank that banks law firms that the activity is fully cross-jurisdictional and for global reach, and it is hard without working as a bank with your clients directly to understand what's normal and what isn't in the context of the work that, for example, a law firm's doing. So
on that, I feel like a lot of the banks already do intense questionnaires. So by the time the investor, the buyer, the end user is going through the law firm, it's just like, no more, please. Like, we've done this with the accountant, with the surveyor, with the bank.
Yeah, it's worth bearing in mind that sometimes it's not just the bank that's asking you those questions. Sometimes it'll cut for example, in the offshore world, some of the queries will come in from the correspondent banks. So, obviously, if you're sending US dollars, you require in the Cayman Islands a US correspondent bank to facilitate that transfer in. So there can be multiple banks, potentially, 4, 5, 6.
Bank could also want the data.
Yeah, precisely. And so it's always worth responding quite properly to your banking inquiries as a law firm.
But on that, I feel like, again, what we're talking about is actually a gap, right? And that this is what Simur will talk about a little bit, is because the end user will have to, if they're doing a high risk transaction or high risk matter, right? The end user, the poor sod has to go through 5 onboardings, each of them probably taking an hour or 2 or 3.
Yeah.
The subsidiaries also have to do that again.
Yeah.
That's a real pain.
A key part of our tool is the shareability of information. So it creates a digital wallet that's owned by the end user. Their information is there.
Let's roll back. Talk to me about Seymour and why this concept and where you guys came from.
So, I mean, I've been at the firm since last September. I was brought on as subject matter expert to help them with their with a lot of their risk assessment piece and obviously compliance requirements. The inception is to build a tool that can deal with complex structures, that creates a digital wallet that is easily shareable between third parties. So, for example, in the funds context, if you have an independent director that's on a fund, they may need to share their information for KYC purposes with the fund administrator, the custodian, the depository, the bank. And so it gives you a one-stop shop to be able to share that information across multiple different parties.
For all the associates as well, in the subsidiaries, in the chart.
So it's the information is input by the end user and is owned by them and is then shared with the various different counterparties. And the control around that sharing rests with the end user, which is kind of a different concept than some of the other tools in the market.
And what do you think of the digital wallet yourself? Obviously you've seen the evolution of CDD. I think from my perspective, the onus was on the regulated entities, and then obviously, like everything else, the end users will own up their portfolios and their digital identity. So talk to me about that. Do you think it's half-half, or do you think in the future it will be me and you owning our own CDD?
I think it has to be. I mean, you see from the British government approach that they've now slightly backtracked on, but digital identity is clearly going to, within the next 10 years, be the mode with which we record and share information around our identity for security, for privacy, for all those other reasons where identity, if we're talking and shift over into the financial crime world, misuse of information and the ability to kind of go on and access.
And I have one more as well. Sorry about that, guys. Just on that, there's an army of bots being created in countries. And this is a really good topic, and I wish we had more people to talk about it. But so a lot of countries are using bots and internet and fake identities as a weapon, right? And every platformer on earth is now using your identity as a verification point. You cannot sign up to anything without date of birth. Do you want to Google? Can Google give us consent for all your data?
As much as that information is being used, that information is being leaked.
Yeah, it's being leaked and it's being exposed. So when is enough, Leonie? When are we going to roll back this digital?
And this is where I think people potentially will do want more control over their information. And I feel that's where the world is going. I think in future we'll all just have a QR code on our phone that contains our core information that maybe or may not be shared on the blockchain, depending on how sophisticated those sorts of modes of transfer become. But certainly that ability to kind of keep a handle on your information rather than just the old school sharing a copy of your passport, I think is quite important to people.
But do you not think there'll be a burst in the bubble of how much everyone is, like, for instance, delivery drivers and Uber drivers now go around collecting IDs with their phones, and for some orders, above 18 needs to be verified. But do you trust the Uber driver to take a picture of your passport on your doorstep?
And your date of birth and all your
critical and everything
information.
And how do you know he's not taking a picture and then going home and then sharing? What license is Deliveroo or Uber giving its drivers to collect ID? You know,
well, and then for as much as that you've got that information floating about there at some point, when you see how often on apps that they report there's been a data leak and your password may have been compromised in a data leak, and they may or may not say that your personal information's been shared. I mean, a friend of mine who works in sort of banking fraud detection is often has to go onto the dark web to kind of search for
his data,
for kind of card numbers associated with illicit transactions, and then also potentially the sale of card numbers, which happens quite a lot. And I said to him the other day, a friend of mine was worried about their information having been shared or compromised. And I said, can you go on and check and see if her information is available or can be traced across the dark web? And he said, look, I mean, of course, her information will be somewhere having been sold, you know, as many. How many apps do all of us use? I mean, a vast number of those will have been compromised at some point. The private information that we shared with various kind of websites and been hacked.
Yeah.
So I think it's becoming more of a concern for the average individual.
But isn't it the problem that the hackers have a greater incentive to keep hacking if you're constantly collecting IDs? Like if there was unlimited,
keeping it secure in your own wallet. Yeah.
But then how important is it for your wallet to be the most secure, the most, protected?
Yeah. I mean, it really is. So I think, that's one aspect. Then again, our tool is trying to take that holistic view of risk that we talked about at the beginning. So trying to ensure that all risk in connection with the structure is properly captured and monitored with real-time updates to the risk rating, which I know, is not uncommon now with tools, but it's essential that you can immediately see if a particular risk factor related to a client from an AML perspective has changed, not just from screening, which is the one we're all familiar with name screening, where you may have a hit you have to clear, but just in terms of other activity feeding in that can indicate red flags that then need to be form a trigger review and need to have urgent attention. And we talked before we started our video around, for me that, and this has been borne out by some of the major fines in more recent years against TD Bank and Metro Bank, for example. Yes, we've all got these sophisticated tools, certainly in the banking world, to be able to detect and find alerting of particular behavior that's concerning, but where it falls down, I think, is where, compliance is done in the gaps, and it falls down in the gaps where there's a handoff from one team to another or one tool to another, or there's an alert that isn't escalated and managed appropriately. That's where things, to my mind, can go wrong. So you can have the most sophisticated tools in the world, but if your end-to-end client lifecycle doesn't guard against that falling in the gaps, like in a tube train with the platform, that falls down, and you've lost. You may, more often than not, a tool somewhere will have detected a problem, sometimes more than once, multiple times. It goes wrong where that alerting is not managed appropriately. And if the system can, do as much as it can to trigger and notify you and make things happen within the core functionality of your KYC tool.
Resolve it, right? So automations in the back end, where
the better to be able to ensure that risk of things falling in the gaps
two points here.
Mitigate against.
I mean, for the remediation, there's a thing called remediation fatigue, where fatigue or alert fatigue, where you have a guy named John Smith or Muhammad Ali, and you're dealing with 400 hits a day. On him.
The backlogs, and the thing, once you get a backlog in a large organization, it is, just the money that's thrown at dealing with backlogs, because you simply can't close down all the alerts overnight, of course.
So that's one problem, which is the alerts are out of hand, where there could be more fuzzy matching, there could be elimination of nonsense,
Much more targeted
much more
systems,
targeted, better systems.
properly calibrated, methodology around calibration. Regulators are being much more targeted in their approach from an examination perspective in how systems are calibrated. Can your compliance teams explain that? Do they understand how it's calibrated? You can't just take the out of the box settings anymore. You must ensure that tool is properly tuned, tested with your audit trail, with your methodology to prove that it's working for you and that you're comfortable with it, and you've got QA around it, and all of these, this tool kind of workflow and environment that grows up to ensure that you're not just placing blanket reliance on your systems without that level of
I
assurance.
wish there was a firm, a regulated entity who did that, who was like, you know what, we're going to design our entire process. We're going to get one tool. We want this tool to take.
The good ones. I think it comes from banking. I mean, you cannot operate in banking with the multiple different tools that you must have.
Yes.
Without trying to have that seamlessness. And I think other sort of financial service providers can learn from that potentially. And that's where my ability to be able to advise our clients comes in. I not only work and support the development of the KYC tool, but I also provide compliance consultancy solutions as well. And it's that background from banking that enables me to kind of view from a holistic end-to-end approach, a compliance process to really see if it's functioning properly. And it's often the simplest things that cause it to fall down. Like at this point, the handover is done by email and nobody's checking the email box properly.
And that's actually, I was talking to somebody in legal market, and we were just saying about Kaylee Spell, shout out to her. She wrote an extract on honesty and accountability, and you'd be shocked how many of the cases everybody knows the guy is just avoiding it. He's not doing his risk assessment. He knows he's not doing a risk assessment. He knows he should do it. Like accounting, right? Your year-end is up. Do the fucking thing.
Well,
but you don't.
And then
you avoid it.
It can be laziness, or it could also just be an inability to understand risk properly as it really pertains to your particular business lines that you're, in your business. And that's tricky because often, your analysts, not your senior analysts, just your average analyst, it is very hard to get them to really understand, appreciate, if they don't come from a financial services background, to understand the context of the world in which you're functioning. So when I was working at the bank I was at, to try to, even for the front line, first line of defense, the funds world would be somewhat opaque sometimes because it's not their background. So my funds background enabled me to come in and explain where the risks were on an investment fund, for example, and what to look for, and who the parties are, what are they doing, who are the dramatis personae.
If you're new in the market, it's a nightmare. It's a nightmare.
It can seem so impenetrable, I think.
Yeah.
And so that's really tough to kind of get compliance professionals to understand the business enough to deliver proper complex risk assessment and a really business focused approach. And that's what I always try to do, is to remain kind of business focused.
2 law degrees years ago, obviously, and trust was my worst. What was it? Wills and trust and probate. Oh my god!
It was mine too, but the reality of it is completely different to the study. I find.
But when you actually studied it, it was relatively procedural and kind of formulaic. But now I've kind of been working with people who sell into fund admins, investors. I don't know what's going on. When they start talking about funds and investment types and portfolios, I'm just lost. I have no idea what they're saying.
Yeah.
For CDD analysts, when you're coming across these complex structures, what do you do? How do you even
I think the first thing is trust your business line. And I don't think you should ever be ashamed, this is for the compliance peeps, to go and ask your first line of defense, explain this product to me, and explain it like you're talking to a 5-year-old. There should be no shame in the fact that not everybody comes. Like, I'm lucky enough now to have worked at a trust company, alongside fund admins in a bank, having done almost the full gamut of offshore kind of financial services. But it only came through me being
practical experience.
No. I was going to say, from being not being arrogant enough not to say I don't know what's going on here at various points in my career. So to say, look, just explain to me.
Yeah.
Even now, get your business people to explain it in their own words. Who's doing what? Why are they doing it? Who's your client? What are they doing and why? source of wealth and funds on trust can be really tricky to get to the bottom of within, if you need to, if you're in a high risk scenario, high risk jurisdiction with independent verification. Inherently, people who are trying to preserve their wealth from a generational perspective can be somewhat reluctant to share some information, which doesn't necessarily always indicate suspicion. It can just be a mindset.
Could be a cultural thing, right?
It could be cultural, could be kidnapping risk is one that's sometimes mentioned about sharing information on beneficiaries if there are children involved.
You say kidnapping risk.
Risk, you
mind explaining that? Because I've never heard of that example from money laundering.
High net worth families can be really, really sensitive about sharing the information of their children, especially if they're minors, because of the fact that if they're in a high risk jurisdiction,
they're at the risk of kidnapping.
The risk of being kidnapped if their information is, and we just talked about information being sold, being compromised. So there are certain jurisdictions in the world where the wrong side of the political spectrum will try and get hold of that information.
Identity kidnapping, like you don't even need to kidnap
individual kidnapping
as well.
Yes.
Wow. Okay.
Ransoms being requested from the family for the return of the.
These are things you hear in kind of Iran's, Venezuela's of the world, but it's shocking to know that this is.
But the Iranians and Venezuelans are also setting up structures in the offshore world to preserve their wealth for future generations. So they're coming to jurisdictions like mine and other places.
Switzerland, Luxembourg.
Yeah, and using those jurisdictions for tax neutral wealth planning. So we have to be able to understand some of those risks sometimes. Now, of course, that could also be used as an excuse to not provide information on beneficiaries. And so you have to kind of really tease that out. And that is where your first line defense relationship with the client is important. And your first line trusting you as the compliance leads to work with them in a collaborative partnership to get the right information out of the client to get comfortable.
So on that, there's two types of kind of banks I've noticed. One's I send you an email to get the info that you're suggesting that they need or to chat to you about the risk scores. And then there's the one that call you. And explain everything to you.
Now we have like Simur, we have the ability to send out, smart.
And there's a system. So I like when my bank calls me and says, "Look, we got to do CDD. These are the information we need."
Well, the system. The great thing about systems is they should, not in isolation necessarily, but they can be used to give you an initial indicator if you've got a risk platform attached, which is ours does, bolted onto your KYC collection piece. You have an automatic initial understanding of where risks and red flags may be present.
Yeah.
But going back to your original question, I always like to use a multitude of different tools to get the information out of the client. I don't think you can ever beat a call.
Yeah.
Especially a Teams call to look your client from the first line perspective, look your client in the eye and try to understand why they're doing what they're doing.
I mean, judging the variables on the call as well. I think hearing their accent, hearing how professional they speak. There's a lot that you can detect on someone's tone.
Also, and this is where some of the sophisticated tools such as Simur can do facial recognition from public sources. It helps to sometimes get that person on Teams call to just verify against public sources that they look like the picture.
Or you the LinkedIn profile we saw.
I mean, the basics. I remember when I first joined the bank, I did have to go through that process with a particular client. I said to the RM, the relationship manager, I want to get them on a WhatsApp call to be able to see their face. And she was like, why? I was like, because I'm going to check it against all of these pictures of them on the internet to make sure they are. This was obviously somebody who had a public profile and you could check. And she's like, oh, I'd never thought of doing that.
Who's hijacked that person's identity.
Yeah, I mean, and now you see we can move on to the possibility of deep fakes right now. That was that call I had back in 2021. Now, is that enough of a control against potentially guarding against deep fakes? Potentially not now. And so we need to use the full gamut of AI, large language models, all the different systems, tools, monitoring to be able to detect and beat the machines at their own game, basically.
There almost needs to be. So I was thinking about this the other day, how do you verify a bot? How do you verify a bot versus a human, right? If they're international, you could technically create an AI video to pretend to say hello. You could have various scenarios and play the scenario that the bank is asking for in your head. Thing. But what I'm saying is, there almost needs to be kind of a tool like yours, right? That says, no, we do have this tick and you can rely on our data. But almost my thought is you need that human at the end of it to be I give this person a green tick.
I don't think you can avoid a kind of multi-targeted approach to check and ensure that you're dealing with the people the people you're dealing with are who they say they are. Because, we still have that ability for a human to just have that sniff test. If something doesn't seem right, something's off here, something doesn't
can't
add
do a
up.
sniff test.
I mean, it can, but also it can hallucinate at this present point in time. Now, in the future, will we get to the point where it's the capabilities of the systems are so advanced that we can be absolutely assured that there can be no errors, possibly. I mean, humans make errors as well, of course. We just talked about compliance in the gaps, which is often just somebody forgetting to send an email, where there's risk and potential failure from an operational risk perspective in compliance everywhere. You just have to be alert to where your operational risks are.
On that, I feel like there's also sloppiness from the money launderers. Like when I look at fraudsters, and we're investigating. I'm not a compliance person. I'm bored, but I will investigate. If you come at me and try to fraud me, I expose you. So we had two lawyers email me saying my IP is being claimed by somebody else, and if I emailed them and instructed them, somehow they would work and submit my IP for me before they do. I thought that makes no sense. Looked them up on the Law Society. They're registered solicitors, both of them, Diane Thompson and Amy Taylor. So I did further digging. Alpiner Law is a legitimate law firm on their Law Society. Certificate is there. So the lawyers were there. The certificate for the law firm was there. But when you looked at Alpiner Law, you found out that when I looked at their IP and other resources, HTML coding, we found out 6 other websites had the exact same copy.
And that, you see, is
different names.
It's the curiosity that a human can apply. We used to call them, in one place that I worked, deep dives. You get in the emoji of a snorkel.
Cute.
Yeah, I mean,
you're actually diving.
Yeah, I'm going to do it. Like, I'm going to snorkel this one because I'm going to have to go and check every possible source I can find, every way I can think. Because something doesn't seem right.
The gut feeling is there.
To pursue all avenues to be able to understand. Now, that's where your risk-based approach comes in, because you don't want to do that for every client. You can't do that for every client. You want to have the ability and the time and resourcing to be able to do that where it really counts.
Yeah.
And produce those 3-page memos.
But also when your intuition tells you, right, you rely on your risk-based approach because it spots things that you might not have the energy to spot that day.
It should systemize it, exactly. So it's a combination of everything, I think, that you need to use. But at the moment, that ability for a human to go, I'll just double check that one, I'll uncover that extra stone is helpful to be able to.
Just on that, just because we're talking about identity fraud and what we talked about with the Amy Taylor example is, these were Indian scammers, no different to the ones that call from cold call centers. But the difference is the strategy is different. So what they've done is actually stealing identities of what we call dormant solicitors, right?
Right.
Dormant solicitors has no LinkedIn profile.
Vulnerable people across the spectrum, not, vulnerable older solicitors who may not keep their information up to date and can be compromised. I think social engineering fraud, which is where scammers target more vulnerable people in society, which doesn't necessarily have to be unsophisticated. It can just be trying to get your victim to have an immediate emotional reaction.
Yes.
Where they're going to respond and act in a way that is driven by the emotional part of their brain and not by the logical side of their brain.
When I got that email, and I was pissed. I was so angry that I did not read the email, and only when I shared it with other people who weren't as angry as me, they're like, "This is AI rich. This is garbage."
And that's what the scammers want, because they want you to make a knee-jerk. All of the text fraud scams, the smishing of, a daughter, and I know this one gets me. Mum, I've lost my phone. I'm calling from somebody else's phone. Another one that's really prevalent is, a fine that is, if you're a rule follower like myself, and you get a text saying you've been fined.
I get that every day.
Trying to get you to have an emotional response. And I think you said a moment ago that they're kind of money launderers or they're lazy. I think, or maybe they lack sophistication, but I'll tell you what, they can be persistent. So when I was at the bank, I had a case with an old lady being convinced by scammers on the phone that she could help catch an insider baddie at the bank, and that she had to wire funds to a particular account. She'd get the money back. Of course, she wouldn't have done. But then it was all part of an entrapment piece to try and catch an insider. And I think because potentially, I don't know, she fell for this, and it was she believed that she could help. And I think there's a natural instinct of people to want to help, that they capitalized on her emotional reaction to that. And they were relentless to the point where obviously the beauty of that scam from the scammer's perspective is that they're putting the bank offside there. So when we were trying to call her and she interacting around the wire transfer, she thought that she was dealing with the baddie at the bank, and therefore it kind of even more supported what the scammers were telling her. And they were calling her, consistently for hours. So in the end, we had to get the police unit in the Cayman Islands to visit her property.
Yeah.
And she was on the phone to the scammers when she answered the door.
Yeah.
And only by the policemen showing their ID and saying they are scammers, the bank's called us, you can trust us, we're the police, was she convinced to put the phone down. But they were...
I mean, you had to bring the police to stop her, right?
Yes,
I mean,
and they didn't let up. They kept calling. So I saw the call log of missed calls over the course of the next few hours, and they literally did not stop in their persistence because they nearly kind of had her, I suppose.
And were they targeting the bank as well? So you reckon they were targeting that bank, or is that the gimmick they were using?
It's just a particular scam that they use, and
so
something works.
The banks they were working with.
Yeah. Well, or just identifying vulnerable individuals who they can call up. And all they have to, in a smaller jurisdiction, you see there are a few banks.
Yeah.
And so they could guess out of, say, the 6 or so banks on the island and just throw a name. And, a couple of the banks have market share. So the likelihood is, if you say we're calling from X bank that most people bank with, they're going to get a hit there, and the person will have a bank account or facility with that bank. And so they can proceed with whatever scam it is. They have absolutely no connection to the bank whatsoever, but they're pretending they do in order to get a wire transferred. And once, of course, the money goes to the beneficiary, it's then very quickly relayed off to subsequent accounts. And even if you think, I know in the UK now that the government has implemented fraud protection, which is fantastic up to a certain level. We don't have that out in the Cayman Islands. So any money that goes, the bank will try very hard to get it back and recall it immediately if they know about it immediately. But it's almost impossible through the banking system because of the layering effect that we all get taught about, in that money will have been transferred potentially via 5 different bank accounts within minutes.
Yeah.
And to get that back through 5 different banks is virtually impossible. Banks now need to hold harmlesses to get that money back as well.
So in UK, is it that banks have a pending kind of they don't immediately release the funds to another place, or how does it work? Where in UK it's a little bit more
problem. It's just that here the government has instituted basically an insurance scheme so that you're protected in certain instances. We don't necessarily. Not all jurisdictions have that.
Why don't banks not?
Because people want their money to go when it's legitimate. They get really upset if you hold it.
Riskier accounts?
You do it is often pending if something's flagged.
Yeah.
And then people will, customers will get very angry if you hold it up for longer than a particular,
tough, don't be high risk. Like that's the high risk life.
That's what we say. But of course, it's that constant, and that's where the first line of defense is so critical.
Yeah.
And that coming back to that interaction between the first and second lines and ensuring that you're partnering together, and that there's a real understanding and appreciation for each side and what their role is essential to try to empower the first line of defense to properly engage with their customers without tipping off, but to give enough information that they can be confident they're assuring their customers that their best interests are being protected.
Yeah. I mean, one thing I want to say is that the digital wallet, the Simur stuff will make it a lot easier to answer those questions. But I feel tragically sad for elderly people and people with the mental capacity to not spot fraud, because I was one of them. And I remember the first cases of...
That's exactly the point I was going to say.
Yeah.
The police would tell you this, is yes, the ideal victim is someone with real vulnerability, but all of us can be silly. All of us are in a rush. Barrages of sales emails coming left, right, and centre.
You won't spot it,
exactly. I was speaking to one of the financial crime unit in our islands who was telling me, there was a compliance officer who was scammed because they just didn't think. But possibly it didn't. I don't know much about this case, but they probably just possibly didn't think it would happen to them.
Yeah.
Like, there's a sense, and then you're having an off day, and then you are remiss, and you don't think, our modern lives are so busy. It's tough.
I think the
It
world.
wasn't me, by the way.
No, thankfully. I mean,
Yeah.
your career would be on the
Although
line.
now that I've said that, touch wood, I'll definitely fall for one now.
You know, I feel like every day you have 1,000 to 10,000 people invested in trying to get you, Leonie, or me,
Exactly.
as a bait.
And they have the manpower. They have that
the manpower.
manpower.
They have the time,
And the
we are
incentive.
the market. We're the target market. So it's not just the regulated entities that need to think about their identity. I think it's everybody and people in position of power,
Very
especially
much.
PEPs. And
I gave a talk to my daughter's school just the other day on educating them on financial literacy and understanding of the financial system, but also, 2 slides on understanding what those texts mean, why they're being sent, what they're trying to get you to do. And I think, the education program in all schools should probably deal with that.
Absolutely. Identity fraud, I think, I know you got to go, but just identity fraud is more, it's a lot bigger than just money laundering. We're talking dating fraud. We're talking people thinking this guy looks hot.
Butchering. Have you heard of pig butchering?
I've not, but I've seen it. But can you explain that, what it means?
Any sort of scam where it could be romance scams or kind of investment scams where they're basically treating you like a pig they're butchering, and it's over the course of time, breaking down your defenses with whatever vulnerability you may have. So romance scams is a classic one, pretending to be
Keanu Reeves.
Yeah.
Keanu Reeves is in hospital and he's 10K.
Oh man, I mean, it's so tragic that people are falling for this, but they're not even that, which is so obvious to most of us. But pretend dating on dating websites, everything where they can target you. And seen cases, in my time, where again, similar to the fraud case with the that we had with the elderly lady, where you could have men, for example, who are aware that they're dealing with somebody who may be a scammer, but they continue because actually they'd rather keep the correspondence going. And if it means sending the lady, X amount of money per month, then they're more than happy to do that.
That's men are a crazy topic. We could spend an hour talking about just men and where fraud and identity fraud comes into it. But just on Simur, because we've been talking about a range of topics, and I feel like all of them relate to what you're doing at Simur. You're building a digital wallet identity. Now, is it more KYC focused or is it more KYB entity focused? And what is part of this product that you're working on?
It's both. So it's providing a digital wallet for both entities and individuals. It can cross across both sectors. And it has all aspects, which is what we're talking about with compliance in the gap. So it's trying to cover all bases to be a sort of end-to-end platform, which does name screening. It has your risk assessment that you can tune and calibrate according to your risk appetite.
So you're going for the full journey.
Yeah, I think that will become in the integration pieces will become increasingly important because of that compliance in the gaps point. APIs function well, but then you always need engineering either side to be able to manipulate your raw data to make it work and be malleable for the particular tool that you're feeding it through to. I think the idea of end-to-end journey platforms will become increasingly what the market moves towards.
We've seen that as well.
It's hard to cover all bases and be all things to all men in a way that works for everybody. That's tough, but that's what we're aiming for.
Yeah, and the needs of a bank, a regulated entity, is so large that it's quite challenging for one vendor to tackle it.
Yeah,
I think the future involves vendors kind of like mixed species groups, like when you see a shark hanging out with little fish that follow him. That's going to be what you see, a main end-to-end vendor with like a transaction monitoring, a risk scoring.
I mean, that would be the holy grail. I mean, the transaction monitoring market is really relatively well cornered, I think, by Actimize, because also from a banking perspective, you want to use the same tools as your counterparty, so you all effectively have the ability to spot the same type of activity.
Yeah.
Particularly going back to that correspondent banking point, you don't want to be surprised when you get an inquiry from your correspondent bank. You want to have already spotted it yourself. But yes, integration with systems is key, and that's where we have to rely so much on our partners in the IT data analytics world to support our work there.
One more thing, I know you got to go. Everything has been done so far in the market for the compliance perspective, for the compliance manager in-house perspective. But talk to me about how important it is to give people a tool to manage their own portfolio.
Well, yeah, and the sort of one of the USPs for Simur is that, as I say, the client owns and enters their own data, so they can share it themselves. Takes the heavy lift potentially off the institution and enables that shareability. And I think that will become that, you know, there's a few tools on the market now that do that to an extent push the data entry onto the client, but with good reason, that then there's a sense of the client owning and managing their own data and their own risk, and they can feel more secure.
Yeah.
I think that will become
And it just answer the questions
commonplace.
once, right?
Yeah.
So you don't need to do that same, what is your date of birth? 8 times in one transaction.
Yeah.
You do it once, share it.
I mean, indeed, as I said, the classic about the independent director in the islands who is supplying 20 different counterparts potentially on one deal.
Yeah.
So the ease of being
All of
able
them in
to
the same month or 2 months, right?
Yeah, the ease of being able to share that information is critical, but then also enabling your tool. That we talked about calibration and having a methodology that's unique to your business. Regulators are still looking for that, in that you must be able to make sure that tool is guarding against the unique risks that you as a financial services professional and institution have. And so it's that balancing act between having it work for everybody and then also being able to tune it properly so it can mitigate and manage your risk. I'm
very excited for that. I think that's what a lot of us are looking forward to seeing in the market is, can users just give us their profile with one button and that's it? And then we unpack it on whatever we're using. So we're very excited to see that. How far away are you guys to showing us maybe a first glance or two? Yeah, we're available to do demos now. So yeah. Amazing. So reach out to Leonie. She'll kind of show you the demo. She'll talk to you through it. Any kind of last comments about Simur, what you're seeing and what 2026 looks like for you? I mean, it's all about EID, digital identity, and combating fraud at the moment, though. And so hence why, for me, this journey is really exciting. To be able to be part of the tech solution is sort of where it's at, I think, now. So I'm thrilled to be part of it. Amazing. Congrats on everything you've done, your amazing career. And thank you. Leonie is just a master of legal compliance and all the spaces that I find so difficult. I mean, I could probably use with a masterclass on funds and how do investors work. And there's some tools that have portfolio, so you could actually assign a risk to the type of investment. Yeah, sorry, I should you keep saying that, but Simur does have that. So it has the ability to have specific portfolios that are managed and running in accordance with a particular set of rules. Again, it's providing that variability without creating confusion. To be able to have a systemic approach across your organization. It's the balancing act of the whole piece is tough to get right, but that's what we're aiming for. Amazing. Thank you guys, and we'll see you in the next one. Thanks.